Some serious market carnage today in the market. You had the S&P 500, it was down 1.8%. You had the NASDAQ 100, it was down 1.8%. Then you had the Russell 2000 down 2.8%. And we were going into this day, we were gapping higher and things were looking pretty good for the bulls to march this market up higher for the fourth time out of the last 5 trading sessions, but that quickly faded. And it was interesting because initially you had a lot of traders flowing into the big FANG tech stocks here. You had Apple rallying, you had Microsoft taking off, you had all of the big tech stocks taking off. You had Google taking off, Tesla was struggling, but you had Meta out there running. And then you also had semiconductors, and NVIDIA wasn't even the strongest of the semis, but you had the semiconductors really running high. And so it looked like that big tech circular thought mindset and thinking that, okay, we're worried about this market. We're going to run to the big tech stocks, and then the market rallies because everybody's pouring into the biggest tech stocks with the biggest market caps, and it's going to rally the markets off of the lows. But that didn't happen today, and that was big. The people who were engaged in the zero-day trading days to options expiration contracts, they got burned big time today because they were all trying to run into those 400 SPY contracts and hoping that they would expire in the money today, but they didn't. They all expired worthless and they got destroyed. And then you started seeing the put action to the downside take hold. So a really volatile trading session to the downside, especially with the VIX. The VIX woke up today, and we haven't seen the VIX wake up in a very long time. It's been in hibernation since last year. It's basically been sleeping like a bear. No pun intended. But any case, really crazy day. I agree, Alan. Crazy day out there today. And we have probably an even crazier day planned tomorrow. I don't know how the market's going to respond to the employment number. The expectations are for 205,000 jobs to be added to the economy. I don't know how where that number is going to come in at, but if it comes in higher, that's going to put pressure on the bulls once again to start selling out of their positions. I don't think the market's going to have a counter reaction. Now, granted, we've seen some crazy reactions. If you just remember a couple of weeks ago, we had the CPI report, the retail report, the PPI, the PCE, you name it. The market was just rallying off of every one of these very hot reports. But today, the fact that we finished extremely low and you had initial claims ticking higher is a good sign that traders are starting to get worried here. And I say good sign is because we really need to find that bottom. It doesn't help anybody when you're trading and the market's continuing to ignore the bad news, because that no landing scenario ends up becoming a really bad correction, even a major recession down the road. So the longer we go without getting this recession, without getting the necessary selling that you need, we're just kicking that can down the road, and it's going to create a much worse reaction for us down the road. So it's better to go ahead and drink our poison now. Sam S., right back at you, man. Good to see you here. So what I want to do in this video, and by the way, make sure you're liking this video, making sure you're subscribed and everything else so you can ask me the questions. We're going to go through the banks. Horrible day for the banks today. Really bad. That was one of the major reasons. And I'll tell you one of the things too that kind of leaped out to me early on that this might not end up being a very good day. And one of the main reasons was because of the banks. We're going to go over the banks. We're going to go over the indices like SPY, the Qs, and their battle with the 200-day moving average. There's a lot to talk about. We're going to go through some of these sectors. I'm going to go through some of the indicators that I watch and like the 10-year yield and all that good stuff. And then hopefully we can take some of your questions and go over some of your thoughts here. So make sure to be posting your questions down in the comments. I'll get to every one of them, and we'll knock out this video here, live stream together. So, all right, let's get going here on SPY. I'm going to go ahead and transfer to the charts here. First off, SMH, this was the one that you saw a lot of strength in the beginning, and then it completely faded. So that's a big deal. Now you got what kind of might be a bear flag pattern that's emerged. So does this bear flag pattern break to the downside? If it does, it's going to put a lot of pressure on like your NVIDIAs, your AMDs, and as a result, it's going to put a lot of pressure on your rest of your big FANG tech stocks. So that's what the SMH. Trying not to get my tongue tied here. Now you got SPY. On SPY, look what happened here today. This white line is the 200-day moving average. Anything interesting? The last 2 times, actually, let's go back to the last 3 times. Going back to February 24th. The last 3 times we've seen bounces intraday where we would not close below it. And then on March 2nd, last week, we saw a huge bounce off of that, led to a massive 3-day rally squeezing the shorts. Today, we tested it, got a little bit of a bounce initially. And then what happened? We ended up completely falling apart. So now you have SPY below the 5, the 10, the 50, the 20, the 200-day moving average. It's essentially below all of them once again. So that's a big, big deal. Now, here's what you also want to be paying attention to. Look at this. What else do you notice? That rising trend line on SPY has broken. Again, when we tested it last week, it was in conjunction with this 200-day moving average. We bounced hard off of that, and off of the not only the moving average, the 200-day moving average, but also off of that rising trend line. We broke below it today. So there's a change in the trend as well. You can also say that you have an inverse cup and handle pattern there. And what do I mean by that? Well, think about a cup, the silhouette of a cup. What is that exactly? It's essentially where you have like a cup and then you have a little handle. Well, an inverse is the exact thing upside down. Like you turn the cup upside down, you have the cup upside down, and then you have the handle upside down. That's a bearish topping pattern. And that's what confirmed to the downside today. So you got all that going on here. So SPY, not the best looking picture. And of course, you have some resistance here that goes back quite a ways. That's still in play right there. That hasn't even been close to getting tested here of late, but we're still keeping it on our charts. Qs, not quite the same scenario with the Qs as what you saw. There's been a lot of strength in the Qs. So we're not testing the 50 or the 200-day moving average yet, but that could come up very soon. And that's going to be a big test because those two lines have practically converged together. So nonetheless, a big day of selling. You're still seeing a lot of strength in like the Apple, where it hasn't come off of those highs all that much. But then when you look at stocks like Meta, where it keeps gapping and running like 2% intraday only to finish red each day, 3 out of the last 4 days, that's pretty significant. So there is weakness cropping up, creeping into the big tech stocks to keep an eye on. Also notice the large volume here on the Qs today to the downside, well above average readings of late. So you also have this breakout level here, and that's essentially where the Qs finds itself at tonight, sitting on this breakout level. If it wanted to break out, it would need to get back above this decline trend line here. So the previous breakout level, that's now acting as support. The next breakout level is acting as resistance, and it's essentially stuck in between the two, but it's also testing the support level underneath. So tomorrow's going to be a big day for the Qs. Can it break through that, and does it lead to more downside that ultimately leads to a retest of the January and October lows? So IWM, much uglier picture, like SPY, broke below the 50 and the 200-day moving average, most notably that 200-day today. And then you look at it. I mean, where's it really gone since May of last year? It hasn't really gone anywhere. And that's what you're also seeing on a lot of these indices, is that there's been a lot of activity, but there's not actually been a significant move going back to May of last year. So, for instance, IWM, for the bottom to really start to fall out, it needs to take out these June and October lows. And remember, it never was able to do that last year when it tested in October, could not take out the June lows. So you formed essentially what looked like at the time a double bottom, but it never confirmed to the upside. In order for it to have confirmed that double bottom, would have needed to break above this 202, 203 level on IWM. Now, let's look at some of these individual stocks here. Well, actually, before we do that, let's look at the VIX, because I think the VIX is also important. Look at the move in that thing today. Almost 18% to the upside, 17.4. That is significant. The reason why I say that is because we haven't seen a lot of low to high moves like that. You've seen a gap up like what we saw back on February 21st, but that didn't have, it was more of a gap higher, which is fine too. It's still strong. It was a strong move. But today, you just saw that consistent march higher. Even though it was at one point in the red on the day, it managed to continue to march higher. So big move out of the VIX. And one thing to watch, the 200-day moving average does come into play quite a bit on the VIX here. But the last time it really made that kind of a move that we saw there, you'd have to go back to like August of last year. And then there was another one, and I'm trying to remember where I saw it at here. Yeah, I think that might have been where it was at, was August of last year. So yeah, that was the candle I was looking for. August of last year, you had that big significant candle. That's what we got right here. And it really started a much bigger move higher after that. So interesting stuff. T2108, 28% of your stocks are trading above their 40-day moving average. Is it starting to get a little bit oversold or starting to get more towards that that area? Yes, it is. I mean, remember, back in early February, we were trading at 80%. Now we're trading at 28%. But for it to get really extreme, you got to get it into these single digits. That's like in your 8 and 9%. And that just doesn't happen overnight. So that would take multiple days of additional selling to get us to that level. And then what else is popping here? Look at the 10-year here. Let me pull it up on TradingView. The 10-year also sold off today. Now, why would that be? You would think that the market would have rallied because you had such a big decline. There was a huge flight to safety today. And let me go back to the to my TC2000 chart, show you what I'm talking about. Utilities, it finished lower today, but if I'm pulling it up, let's go to my other sheet here. If you're pulling it up on the sector watch list, down here on the bottom right-hand side, utilities, staples, and healthcare were your three strongest sectors. The weakest, financial, materials, discretionary. Why is that important? Because when you have utilities relatively doing the best, and for a long time, 9 out of 11 sectors are trading higher or trading lower on the day. Utilities and staples were the only two green sectors. Eventually, you get enough selling pressure, it's going to take everything down with it. But XLU and XLP, your two safest sectors where a lot of people want to put their money into when things start to go awry, they were the leaders of the market today in terms of relative strength. So when you're starting to see where XLY, your discretionary, this is like, you know, your Amazons and Lululemon, or however you say that name, these are the ones that are starting to sell off really hard. This is your discretionary money that you don't have to spend. Staples, money that you're going to have to spend regardless if it's a recession or not. That's like waste management. Waste management. Why did people like waste management during a recession? Well, in fact, it finished higher on the day. But why? It's because people still need the trash taken out, regardless if it's a good economy or bad. So Amazon, though, people might start cutting back on their expenses. That's the reason why it was down. So XLY, it's breaking down in a big way. But what is really taking a hit is the financials. And so you have stocks like SI, where it's down 42% today. And then you got SIVB. And there's these concerns of them having, you know, a tightening of capital, down 60% today. These are like borderline. I wouldn't say they're as big as a Lehman Brothers event necessarily, but you're starting to get to where there's banks that are on the verge of capitulating. And so SIVB down 60% today. They did a 1.25 stock offering, $1.25 billion stock offering. And so massive move to the downside, down $161 to $106 a share. That is massive. There's fears out there. And then you take JP Morgan down 5.4%. When do you ever see that happen? Regional banks had their worst day since June of 2020. So you're talking about things now that haven't even happened in the last 3 years, or in almost 3 years, I guess is probably the better way to say it. And JP Morgan was actually bullish coming into the week. I was bullish on it. I mean, it wasn't capitulating like it did today. Coming into it, I mean, look, it was sitting right underneath that resistance for a potential breakout. You had an inverse head and shoulders pattern. It never did break out, instead to the downside. That's why it's important to wait for confirmations, because sometimes you don't ever get that confirmation and you can avoid an unnecessary loss like what JPM would have been if you were trying to play it before it actually broke out. So this is a significant move. 144 down to 130. That's a 10% move in JP Morgan in 4 days. 4 days. That's all it took. Then you look at Bank of America, similar price action, down 6.2%. And that's heavy volume. That's panic selling and BAC today. And it's going from 34 down to 30, another 10% move. You look at Morgan Stanley, another massive move today, down 4% almost. So this has actually got a topping pattern that has confirmed. You could even possibly say that's like a head and shoulders pattern, left shoulder, head, and then right shoulder to the downside. And it filled the gap from February or January, actually. So that would have been what, January 17th. So now, does it continue to sell off lower? And if it does, man, this thing can have a long ways to drop. I mean, maybe 84 is in store for this stock. So trying to take a breath as I go along here, but there was a lot to talk about today. So you're seeing a flight to safety with bonds. Look what bonds have done, up 3 days straight. Now, these things don't move fast. Bonds is a much slower chart. You're not going to see like 10% moves necessarily on a day-to-day basis or extreme volatile moves. But look, 4 out of the last 5 days, it's up. That's starting to show you where people are starting to think to themselves, hey, 5% risk-free, not bad. I'm not getting that out of the stock market. Peace out. Okay. Not that you can't make money in the stock market. In fact, I think as long as you have a trend, you can make it in either direction. It's much easier to do it in the trend. So if we do have a move to the downside, that's great because all of a sudden you have a very tradable trend that can work in your favor. So, excuse me, TLT is starting to see where investors are starting to think to themselves, maybe I should put some money into the bond market, get that 1 or 2 year bond that will net me 5+%. Not bad. Okay, what else am I looking for here? I had one trader actually ask me on a YouTube comment, can you please cover Rocket, RKT? This is a financial stock here. Not down as much as the rest of the financials, so that's a good sign. But you have this basing pattern that really just goes back to April of last year, and it has yet to break out of it. So for me to really get excited about this stock, for me to think that, okay, it's bullish now, I would need to see it get back above this area. So that would be a move back above 11. It's trading at 829 right now. Is it likely to hit that tomorrow or next week? Probably not, but it could happen at some point this year. And at that point, I think it would be a much more intriguing stock. So that's my analysis on RKT. Oh, another one I want to talk about from the financials, SHW. When do you see Charles Schwab drop 12% in a day? It just doesn't happen. Here, I mean, we're back at its 2022 lows almost. I mean, it's trading at 66. 2022 lows is sitting at about $60. So you're not talking about a move that far away from taking place. Your rising uptrend, that got broken today. So this one's looking very problematic. I don't necessarily think Schwab is a bad company. I don't know much about it from a fundamental standpoint. It's been around, since the beginning of time. But it's not necessarily a stock that you're hearing about like with SI and SIVB where there's a lot of problems popping up, but it's taking a beating today nonetheless. Let's see here. Let's look at what some of you guys have been talking about here in the comment section while I've been blabbing. Put my head way up here. Got a big old head. I got a fresh cut too, which I'm kind of happy about. Starting the capitulation, is that SI Crypto SBNY serious? Yeah, I think it's definitely serious. Anytime you're seeing stuff drop as much as it is, like SBNY dropping 12%, Charles Schwab dropping 12%, and then you got the SIVB dropping 61%. I think it's really serious, and I don't think they would be doing that stuff if there wasn't a big problem behind it. So I do think there's probably regulators behind the scenes trying to find out what is going on there. All right, that's good. Yes. Short from 405, man, you got some profits right there. So by the way, my whole portfolio right now, I am short on my swing trading. Yes, I have long-term accounts and I have dividend accounts and stuff like that, and I build those up over time. But my swing trading accounts, I'm all short on it right now. So my big positions are PSQ and SH. So I got a lot of cash in that account in terms of a percentage to stock ratio. So I haven't deployed it all just yet. I've been a little bit on the hesitant side to do that. But if you're in SPY at this level, it's at 391, you got a 405, you're sitting on about 3% gains. That's pretty good. I got back in, and I'll tell you what I did here. I've been in SH for a while, but I got stopped out of it here on this candle right here. And then when we started breaking down that day, it became very obvious to me that we were getting ready to sell off much, much more. And so I went ahead and got back into SH and PSQ, and it's been pretty good ever since. Now, one of the things that tipped me off this morning was the fact that IWM was selling off significantly relative to SPY and QQQ. Now, if you remember, let's pull up the, let's see, what is this, 5 minute? Let's pull up like a 30-minute chart here. There we go. Right here this morning, it did pretty well, opened up pretty well, and then it just continued that crescendo lower. So the same thing with SPY. Did the same exact thing. Opened up high, a little bit higher, not as strong as the NASDAQ, but then it sold off. IWM, on the other hand, it didn't do anything but sell off this morning. It was just one candle after another. In fact, I think was 11 out of 13 candles to the downside, and the 2 green candles were practically dojis. So nonstop selling in IWM today. Granted, what's going on in those banks certainly weren't helping IWM at all. That was leading to a lot of the selling there as well. But when I saw that, and when I saw the weakness in JPM, and I saw a lot of those other big bank stocks struggling, and you saw the Russell pulling back, and the breadth on the market wasn't good at all, I didn't believe, because what we saw on Monday was the exact same scenario where the Russell was struggling, the SPY and Qs were rallying, and then the market started to give it up and started pushing lower. So like if you're looking at SPY here, just continued to push lower all day long today. Opened up higher and then gapped lower. So I think I was looking at SPT, which is kind of funny. I typed it in wrong, but it wasn't that much different of a chart. So there you go. I got to look at what I'm typing sometimes, but still the same chart. What the market did today. So that was my first clue. That's why I had no desire to try to cover or close my SH or PSQ positions, which are 1-to-1 inverse of the SPY and QQQ ETFs. So, all right, Ryan Fairchild, MICO. See, I got to type, man. I don't know if I'm MLCO. That right? Okay, there you go. Maybe we got something there. All right. So MLCO, Melco Entertainment. So if you look at WIN, Brandon, I mean, it's not having a good day today. That was a beautiful bull flag pattern there on WIN. That was such a nice pattern that you saw, that bull flag breakout. You didn't get as much of a bull flag pattern there in MLCL, if really any at all. But you did get a nice pop when WIN popped as well. But now you're kind of faced with what might be like a topping pattern here. That doesn't look too good to me. Move below that 1190 area or below the February 24th area would probably be my reason to get out of the stock if it were me trading it. So you also have a little bit of a gap here to fill still. I see it as just a lot of chop, and that's going all the way back to the beginning of the year when there was a lot of strength in the market. It didn't really rally with the rest of the market. So DKNG, this one's a good one, right? You have this rising trend line. And what's it doing here? It's testing it. We got a little test, don't we? Yep, we got a test. Pulled back to this rising trend line today. So tomorrow's going to be critical for it. So the employment number, that's going to have an influence on, because if it comes in pretty cool, then you're looking at a potential bounce off of that trend line. If the employment comes in hot and the market rallies or market sells off, then it's probably GG's for this rising trend line. I only know GG's because I hear my son say it all the time. I ask them, I was like, what is that? And they both tell me it's a good game. It's a good game for DKNG, good bet, whatever you want to call it. But that rising trend line is going to be critical for tomorrow. Yeah, IWM closed below 200. I hope I didn't say otherwise, but yeah, it closed below the 200-day moving average there. NVIDIA, let's take a look at it. All right, so the consolidation over the last couple of weeks here, we're talking about 2 weeks of consolidation, hasn't really gone anywhere following its earnings report. Since the earnings, it's just been trading sideways. Keeps trying to break out, but it doesn't really actually sustain the move. It keeps fading 3 out of the last 4 days. So to me, this huge gap is still very much in play, even though it's not necessarily trading inside of it right now. I think it's very strong potential that you see it in the days to come, especially if the market continues to sell like it has been. Yeah, careful with that stuff, man. That can be pretty high risk on SIVB. Brother, you are one of my favorites, so I'm so glad you're going live and doing more on YouTube. I'm trying, man. Sometimes I get tired because I am a full-time trader. I do this stuff, so it's sometimes, when it gets to the end of the day at 4 p.m., especially it's been stressful, you're kind of like, man, I just want to go to sleep. But I'm trying to be a little bit more disciplined doing these things on a more regular basis and do that. But I appreciate the encouragement. That gives me the encouragement to keep wanting to do it because I know you guys like it. Any chances we'll see a big correction crash in the near future? I've been telling some of my friends and everything. I was like, man, there's so much going on here that makes you feel like we're on the verge of a big risk event. The 0 days to trading options expiration puts a lot of concern into this market for me. It's where we basically have turned it into a daily casino, creating like a sub ecosystem of the overall market to where it doesn't really matter what the news is, like what we saw on the last unemployment number when we beat it by 2.5 or like 2.5 times what the estimates were, like 500,000 jobs, and yet the market still rallied, mainly because of the 0 day trading options, days to expiration options. And And so I do think that there's a good chance that we see much lower prices. I mean, we're expecting much higher rates now than what we were expecting even late last year. And yet we should be far closer to the lows from October than where we are. I mean, personally, I think we should be about 10% lower. I think the market's in la la land. Is not with traders just constantly aping into all these different stocks. You saw it today with Meta. You saw it with the big FANG stocks. You saw it with NVIDIA. You've seen it recently with Tesla. They just keep buying up everything until that mentality results into a lot of big losses like what you saw today. You need to see more of those days. People won't give it up. Let's look at CAR here. So, I don't know. What do you guys see here right out of the gate? By the way, I saw it. I was looking at Avis for a rental car here just recently, and holy cow, I talk about some bad reviews and with Avis. I don't think I'd ever use Avis, but that's another subject there. But left shoulder head, right shoulder confirmed today. So that's a big move right there. Head and shoulders pattern on Avis confirmed. Looking at it from a long-term standpoint, hasn't got, I mean, from an investing standpoint, I don't see any edge in it. I mean, going back to late 2021, I mean, it's really gone nowhere. So broken trend line there off of the December lows. So that's no good either. So I see it more from a bear standpoint there. It's confirming to the downside. SOFI, man, every time I talk about SOFI, it gets me in trouble, man. People get mad. But one of the things that's kind of interesting about SOFI is it managed to fill this gap today. So that's kind of a cool thing there. And I get people too that's like, oh man, I don't have to necessarily see it. Okay, like if you look at this right here, and did it fill the gap completely? No, but I think the big thing is that if it went straight up here and never came back down to this level again, would we consider that a gap fill? Pretty much. I mean, I think it's pretty much a gap fill at that standpoint. So client trend line that continues to push lower. You're filling the gap. I think there could be some potential for a move back down to this 490 area. I don't think a lot of people want to hear that, but there's not a lot of support underneath. So if this market starts to take a hit and you start seeing the same kind of hit across the board with the financials that you saw today, yeah, move back down to 495. That's very much in order. So that's why it's so important to use stop losses. It's why I preach on it so much, because if we don't use them, events like today can really bust us up. If you're in like SIVB and you take a big hit, I mean, it's hard to recover from a 60% loss. It just is. And you got to make so much more to just make up for that. And so the key as traders is to not put ourselves in that hole by using stop losses. Don't get married to stocks, especially from a swing trading standpoint. SWBI. Oh, let me see. I didn't talk about Ethereum yet, huh? I know I don't even say that right. I don't even know if I try to say it right, but let's pull that up. Look at that sell-off. Holy cow. I haven't watched this at all today. I mean, you look at Bitcoin, it took itself a big hit. They're down to 20,000. I mean, it was just a couple of days ago, less than a month ago, was trading 25% higher. Now it's trading back down to 20,000. So that's a pretty big move. You're seeing the same thing in Ethereum, whatever you want to call it. Don't hold it against me that I talk like a Florida guy. All right. This is the big move right here. This is your double. When I switch over to a different platform, I always kind of goof it up a little bit, but you got your double top right there and there. So it's breaking down, confirmed it today. The next level of support probably is going to be around this level right here. So that's where I would be targeting going forward, is maybe a move all the way back down to this 13 level. It'd be pretty significant. Another probably 10% of downside, but it's possible. SWBI. Let's pull that one back up here. Oh, this is Smith and Wesson brands. Okay. Yeah, I mean, same thing with the RGR, kind of trending lower for about the past year and a half. These stocks do really good when they're in the news. So, I mean, it's sad to say it, but it's like when there's something bad that's happening in the news, or they start talking about banning guns, these stocks get a run on them because everybody runs to the store to buy them. And so, yeah, I think sometimes the absence of news isn't necessarily the best for these stocks. They tend to do a lot better when there is bad news surrounding them. But overall, it's in a downtrend sense for the past year and a half. So I don't necessarily see that there's like a major reason to want to get long on the stock at this very point in time. I would probably be looking for a break above this rising trend line before I would even consider getting long. It's nice consolidation here, but it's also on the verge of breaking down as well. So I think, make sure I'm drawing that line right here, is right there on the cusp of a breakdown, testing that 50-day moving average. Ken, I appreciate it, man. I really, I mean, there's times where I'm frustrated myself with trading. I mean, I think this year has been hard. I don't think I've necessarily, dug myself into a hole or anything like that. I think I was down at one point, like 1 or about 2% in the portfolio, and I've made a lot of that back. But it can be frustrating because when trades don't go your way, you want to just get annoyed. And this year has been crazy. I think this year is way harder trading than last year. CPI next Tuesday will give us the next 200-point swing. Yeah, I think that's going to be a pretty big report. I think it's going to probably come down to that as to whether or not we get that 50 basis point rate hike or not. And from what I can tell on the inflation, I mean, it's just, I don't think those reacceleration numbers that we were seeing over the last 2 weeks are going away. I think that's going to be reflected in the next CPI report. I would be shocked if it wasn't. Justin, I appreciate you liking the podcast. For those who don't know, I actually have a podcast. I keep meaning to want to make it into a YouTube video as well. And I don't know, the logistics of this office. One day I'll probably show you guys the office. It's actually kind of a cool thing, but I need to actually make those into videos as well. 37 PE. I'm not sure about that. Let's see. Oh, well, I'm just not sure what he's actually saying. In context of whatever. Confirmation. So I think I'm going back through some of y'all's replies to what I was saying here. Thoughts on SPY ES tomorrow, Volmageddon. I think it was back in 2018 where you had just a crazy spike where volatility had been really low, and all of a sudden out of nowhere it jumped like 110%, and everybody was always shorting volatility. That was the big play, always short volatility, and then all of a sudden it just ripped them to pieces. And I think there was volatility ETNs that had to shut down, and people lost all their money. That was a time to be alive right there. Yeah, it could be a time. I mean, Europe has been pretty strong. I don't really follow the foreign market indices too much. I mean, to a certain degree I do, but I wouldn't say I follow it on a daily basis. Yeah, let's look at the DXY here, guys. So remember this, we were talking about this at the last one. You had this like breakout level here, and it's technically holding it so far. So dollar right now holding it. It did sell off. You saw the same thing in the US 10-year yield today. It pulled back. That's because there's such a huge flight to safety right now. So that was a big shift today to seeing that big flight to safety, because most of the times you get a what was it, like a 2% decline in the yield, you would think that the market would be taken off, but because there was so much fear that just came out of left field, really, it was able to, still continue selling off despite the fact that 10-year was selling off. Natural gas, man, I get this one a lot because I think a lot of people want to see the natural gas rally, because if you look at it on the chart, let me pull it up here. UNG, this is the big one. So you had this nice rally that was taking place last week, and it's just completely given up a lot of it already this week. But my rule of thumb is I just don't trade natural gas. I always feel like it's a losing trade. And you go back in time, I mean, it hasn't shown us any reason not to think that. So I think natural gas, it's a dangerous play. There always feels like it's trying to form a bottom, but it never does. And so when it starts to get like that, and when it almost feels like a leverage inverse ETF, I just move on. Market touched down the trend line today, so either we bounce and retest the 200-day moving average or penetrate back. Let's see. Yeah, SPY actually broke its rising trend line off of the October lows there. Did you guys see that? So that was a pretty clean break there. Oh yeah, I definitely think that European markets are way overextended on the. Every time I look at one of those charts, they're just massively overextended. DKNG, we talked about that one already. That was already testing that rising trend line, but let's look at HL. HL got that rising trend line there that it broke, what, February? And since then, it just hasn't really, almost you got like a head and shoulders pattern that forming there a little bit. It's kind of a dilapidated one, but nonetheless, it kind of looks like one. Left shoulder, head, right shoulder. It hasn't completely confirmed it yet. So that's what I would probably be watching for on HL. Doesn't look bullish to me by any means, but it does have that particular look to it with that head and shoulders pattern. Yeah, I'll try to do one of these days. I actually edit all my videos and stuff. I try to do it without the least amount of edits as possible. BOIL, I can look at BOIL. It's along the same lines as UNG. It's just every time you want at the bottom, it just never really seems to do so. I mean, $8 last week. Now it's back down to $5. It's a high risk trade. Long term never looks good. So UNG, I mean, I would say probably what, 15 years. It's just been kind of a dead trade. We got Nathan Babcock here wanting some DBNG here. DBNG? No, he must have been asking about DKNG. Yeah, this was a lot of people asking about DKNG. Right, this is the rising trend line here. This is what I'm watching for. It continues to just hold the rising trend line, but that was a big pullback today at 4.3%, testing that rising trend line now. Yeah, I think trying to predict BOIL, man, trying to predict BOIL, UNG, it is just a losing game, man. ABBV. Oh, haven't talked about ABBV in a while. So what I'm doing here, I haven't really messed around with this chart of late. I'm just trying to find the support here that we're talking about. I mean, there's two support levels that you could hang your hopes on here. Is this support level here and this support here. You got some declining resistance there. Say marking this thing up pretty good, but first, let's see, second top, first top. So really like a double top, even though they're not quite equal. I would probably, you also have a gap right here that hasn't been filled yet. So I think for now that would actually maybe, yeah, it looks like it actually did fill that gap. Looking at that chart, I mean, I don't think that looks bullish by any means. And if you look at healthcare stocks in general, I mean, they're down like 11 out of 12 weeks, I think, in a row. It's only had one winning week so far this year, and it was last week. And it's already given up all those gains. So it didn't last. So when you're looking at XLV and just how much of how much selling pressure there's been, even during January when the market was just ripping, one of their best Januaries ever, it's hard to want to get excited about ABBV because of that fact that it's just had a boot on its neck the whole time. DBRG, all right, DBRG. You know, it said DBNG, and I was like, he must be talking about DraftKings again. Not that he always asks me about, but I've been asked about it a lot today. DBRG. XLRE, so this is the real estate sector here. Is that what DBRG? Yeah, it's a REIT. So you look at XLRE breaking that rising trend line there over the past couple of weeks. That's off of the October lows. This one here, man, almost looks like you got a little bit of a bear flag there kind of working. Nice little coil action. Tried to break out yesterday, but man, that was short-lived. Definitely not something I would short. Just because, I mean, it's like $12, and XLREs, they usually have some big dividends attached to them, so I don't want to go around paying the dividends. But DBRG, I'd be cautious, you know, of a possible move back down to 1050. There's a lot of capital concerns with the banks. I mean, they're just, I mean, I think, I don't know what video I did this on, but I talked about that might have been last week. I was talking about that head and shoulders on XLF being much of a concern for the markets going forward. Ended up confirming in splendid, like complete, just amazing fashion. So Tesla, yeah, Tesla's taking an absolute beating right now. Looking down on the bottom below, if you're watching this on YouTube, you can actually get all my market research each and every day. That's just by clicking the button join. But one of the things I talked about in there today was TSLQ. I was like, man, this is kind of a nice base. I wish I would have taken it. I didn't take it. I didn't want to overexpose myself ahead of tomorrow by adding a short ETF on Tesla. So I held off. You kind of regret that now. I mean, that's one of those I was like, it was almost too perfect. But beautiful base there on TSLQ, and it's pushed into the upside there. So what I'd be watching for is this gap fill here. And you can see that on TSLA right there. So definitely something worth watching there. My tongue is getting all twisted up here, man. I'm on my words. Let's see. NEO. What we got here? Holy cow. All right. Needed some perspective there. It's not as amazing as it looked at first, but it's coming out of a base there, though. That's for sure. Really nice breakout. And we're talking about healthcare stocks being under the weather, but look at this one. I mean, this one's just continuing to ape higher. And I've seen that in a number of the healthcare stocks of late, too. There's quite a few of them out there that's bucking the trend in its own sector, but could have like a ascending wedge pattern right there that it's trying to break out of. Again, some of that pressure in the market of late is resulting in some long shadows right there on that breakout attempt. So you're getting some false breakouts as a result, but really nice base right there. Definitely worth watching. Yeah, the resets, and that's one of the things I think a lot of people don't realize is that they reset on a daily basis, and it just isn't worth playing with that in that regard, especially when you can't get any kind of upside to them. TSLS, that's the one. Oh, that's the other one. Okay, so there's a couple of them out there. Jeez. Home Depot's in the house. Look at Home Depot. Sometimes I forget to change the message down below, but double top here. No, this one like the back of my hand. Double top, that one's formed of late. And then you got the confirmation to the downside. Look at that. Then you had this consolidation here, and you're starting to get that break to the downside. Well, this one's been on my short list all week, actually for a few weeks probably, but yeah, that's starting to take that next leg lower there. So I like that if it breaks below the lows from March 2nd as a short, and then with a stop loss above the highs from March 6th. So yeah, what is that, about 12, 13 bucks of a stop loss. Guys, this is a good session here. I thoroughly enjoyed going over these stocks with you guys. Came at it today, and gives me some good ideas for going into tomorrow. I will not be doing this next week, though. Okay, I got to take a vacation. I'm taking some time off next week. Haven't done that where I've just completely disconnected from the markets for maybe 13, 14 years. So this will be a big deal. It's one of those things that I've been long overdue to try to spend some time with family without being distracted by the markets. If I have some short positions, obviously I'll be watching those and making necessary adjustments. But I'm going to kind of take a back seat on some of the content and just relax with family, enjoy some time. It's going to start for me on Saturday, which I can't even begin to anticipate how nice that will be. So I carry these live streams every Thursday. So that's the goal. Doing them every Thursday at 4:30 p.m. That gives us a little bit of time to digest what happened in the market and to be able to tune into this. So 4:30 on Thursdays is when I'm planning on doing it. So usually I have it posted at least the day before. So any case, I appreciate you guys watching, and make sure to click the join button down below. Subscribe to the channel. That really helps me out quite a bit. I always appreciate that. Thank you guys, and God bless.